So now they can afford a tax cut. Just months ago, in the May budget, Scott Morrison and Malcolm Turnbull pushed tax rates up. That's right, up. They lifted the Medicare levy from 2 to 2.5%, beginning in 2019. It'll net them $4 billion a year, money they said they needed to fund the National Disability Insurance Scheme. And now they can afford a cut. Maybe they did really need the extra money for the National Disability Insurance Scheme after all. And there's an extremely flimsy argument that they did. The mid-year budget update, due within the fortnight, is likely to show the budget is slightly better off. Unexpectedly strong company tax revenue in the first 4 months of the financial year has put the budget almost $5 billion ahead of target. Much of it flows from a better-than-expected run-up in commodity prices, which we now know did last. But that won't stop an optimistic forecaster or an optimistic government from acting as if it would last and handing out permanent tax cuts of up to $5 billion per year. The most successful private sector budget forecaster is Deloitte Access Economics, whose senior staff used to prepare the official forecasts when they were in Treasury. Deloitte says that by the end of the financial year, revenue will be only $2.7 billion ahead of the budget and only $0.9 billion ahead in the following year. It produced a ready reckoner to enable us to calculate what kind of a tax cut those boosts could buy if it was permanent, which it almost certainly will not be. $3 billion could buy a lift in the $18,200 threshold to $19,200 and a lift in the $37,000 threshold to $38,000. That's all. $1 billion, a more realistic, though still inflated, guess as to how much extra the government might have long-term, could even buy the lift from $37,000 to $38,000. Deloitte director Chris Richardson says it would buy a small sandwich or a small milkshake. Unless the proposed tax cut applied to hardly anyone, which is a trick they've pulled repeatedly. Lifting the $87,000 threshold by $1,000 costs only $110 million per year, lifting the $180,000 threshold costs only $30 million. It's something to keep in mind if we once again get tax cuts skewed towards the top. It might be so much a case of the coalition helping out high-income mates as making a gesture it can afford. Middle earners are about to get clobbered. The government's own figures, spelt out by the Parliamentary Budget Office, show the average tax rate faced by middle-income Australians on $40,000 to $50,000 is about to climb 3 percentage points within 4 years. Instead of handing over 14.9% of their income after low starting rates and the tax-free threshold, middle earners will find themselves handing over 18.1%. Within 4 years it's the result of bracket creep, and the increase in the Medicare levy. And the projected return to surplus in 2020 to 21 depends on it. The only ways to deliver serious tax relief are to push out further the projected return to surplus, just as it has been pushed out repeatedly by treasurers dating back to Wayne Swan, to fund the needed tax cuts with big spending cuts, something this government and the last have been incapable of, even in non-election years, or to fund the tax cuts by lifting other taxes, or by hoping something comes along.